get a snus in me, then I'll be ready to go. Test. Microphone working. Okay. So what I decided is we're going to go through 3 different charts, 3 different pairs on 3 different contexts. What I mean by that is we're going to start NQ 5-minute low time frame intraday work. We're going to move on to pound dollar 30-minute, which is a bit more intraday to intra-week, and then we're going to go and finalize this and wrap it up with gold 4-hour. So you'll be actually looking for kind of more swing moves on that type of time frame. Okay, and that's just to kind of show both the consistency of our methodology on all the time frames, how price is fractal in that sense, but also the slight shifts that we kind of make between those time frames. All right, it's important that you kind of look for both of that. You firstly understand we can use the same and similar concepts on all the time frames, but we try to view them in different contexts depending on all sorts of things. Okay, so starting with MQ, we got the double sells that I've taken today. I thought it's a good example to go with. So this obviously did eventually run like a motherfucker all the way down. When you're within this context of the 5-minute time frame, you're trading an intra-session trade. You know, you're taking at the start of New York and you're trying to exit mid-New York. In that context, you don't need to be crying that you've missed the next set of moves. You could have had a runner open, but you don't need to anticipate full position. Variance tells us that closing the position at the equal lows or on a sweep of these equal lows, etc., is on the long run going to be more of the profitable play. And as long as you play into the system and your system does have positive expectancy, then there's no going wrong in that. You know, I'm not going to cry that I missed a couple fucking 100 pips or whatever it is. So the context of this trade, why I've taken the trade, is very simple. I mean, you can point this out to a dog, right? We have this high here. This is the initial London high. Yeah, the initial London high, 9:55 a.m. London time. Mid-London, pre-New York, we pushed above it, 1 candle, held above it, pushed 2 more candles to the upside, captured buyers above these highs, took out sellers above these highs, and then we began this distributive price action. Okay, this curved off formation. You understand what I mean by that? We had this distribution above the highs, above the local London highs. We pushed back beneath these highs here, about 1 p.m. London time, again just pre-New York, and upon this reversion back beneath the initial London highs, what we're seeing is this continuous test into VWAP, and VWAP's clearly acting as a resistive force in this case. This was really, the VWAP is what guided my entry far more than the fact that we've just swept and deviated a high, right? The fact that once we produced this deviation and distribution, the fact that the VWAP continually suppressed us was what actually gave me much more of a bearish inclination. Pushing into the downside, what do we have here? Equal lows is again early London equals that we anticipate to get taken. Once we push below these, and we saw 2 candles later that we were not able to reclaim. You understand on this candle here that we were not able to reclaim, and we had continuation. Once I saw there's no reclaim, I knew, okay, this is good for us to hold. I continued to hold, and I got a really really nice fill on the 30,450 zone. Okay, there might be a price discrepancy in the contracts because this is the June contract and not moved on to the next one yet. But the price moves the same way. So we had these equal lows here, the 30,449 lows. We initially got tapped on them, and that is precisely on New York Open. We had that surge of volume. Surge of volume pushed us to the upside, which basically took out a lot of early sellers. So sellers that tried to grind the price down here got taken out on the New York Open by this push to the upside. When we pushed, all we did was rebalance this candle, the 1:20 p.m. candle, and in doing so, in fulfilling this rebalance, we also had the test into VWAP, 1, 2, 3 drives into the zone, perfectly closing below VWAP each and every time. Really lucky with the entry in a sense. Like I literally was at the computer and ready at the right time. You know what I mean? I was very lucky with that. Straight push into the downside. We attempted again to push back up. The buyers attempted to defend this zone, but all this actually acted was a rebalance of this candle here, right? All that did is act as a rebalance of this zone. And then we could continue to the downside. I closed marginally below these lows here. It did continue, but as soon as I've closed this, I've taken 2 trades by 1:15 p.m. My day's done. It's time for me to pay myself, get to the fucking gym, get to the sauna, do whatever I need to do, you know. And when I'm trading within this context, within this intra-session mindset, that is my mindset. And as I'm saying, variance will, on the long run, will play into your favor if you have positive expectancy, if you have good models to run by, to work with. Then when you're trading and battling in these intraday, intra-session contexts, then paying yourself in the session, paying yourself in the day is a high EV thing to do, you know. Yeah, I've missed out on the extra pips today, but on another time, this could fall reverse and hit me at break even, or God forbid, the stop loss, etc. So as I'm saying, variance plays out in our favor, and it's very important to be kind of viewing things in that mindset. You know, profits disappear fast on NQ, on these low time frames, on these scalp type of moves. Your profits there for a minute and it's gone 5 minutes later, you know. Other things that you can note about NQ, I mean, the reason why I had a bit of that bearish bias we had Mondays. Well, firstly, okay, before we get into Monday's high, we had the mega gap on Sunday night's open, right? We had this humongous gap, which we marginally began to fill, but nowhere near enough. We will come down further, I believe. We had this mega gap to the upside and continued buying pressure all throughout Monday. We provided Monday's high in New York. You've got to understand, for this move to continue, just insane buyers just got to have to keep defending every single zone. At some point they're going to run out of steam, and that's what we essentially saw. We had this one high here, Monday's high New York. We had a drive into that high, which is our second drive, Tuesday London, and we had the third drive in the high, which is Tuesday London pre-New York. 1, 2, 3 drives into this region, which tells me buyers are exhausted, buyers can't continue this, and sellers will take control, I believe, in my mind, for the rest of the London session. You know, when I saw this, like London, we're going to take control. We had these fresh equal lows that were produced from Monday 11 p.m. London time and Tuesday 2 a.m. Asia session. So I knew these equal lows were in sight. I knew that we could be taking them out, and that's why I had the bearish context. The reason we pushed lower to the downside is the sellers caught momentum, buyers stopped defending the zones. Once we got below these equal lows, a cascade of sorts happened. All the buyers who tried to defend up here, their stop losses and liquidations were hit, which further fueled selling pressure, pushing us to the downside. Once we've got down at these prices, buying is no longer as attractive as it is when we're in a massive uptrend. So there's not as many fresh buyers. Volumes for buyers have died down, which is, of course, this kind of like grind to the downside. You can see this part here. This is just complete exhaustion. Buyers aren't willing to participate. Sellers are kind of getting a free push to the downside, you know. And as soon as the last set of buyers capitulate, push straight down. In terms of what we can see from here, like, you should know, by working with me enough, that I do not jump from trade to trade. Like, when big moves happen, I don't feel compelled to get right back into another one. You know what I mean? In terms of, I mean, I would like for, I'm assuming sellers are going to be exhausted, essentially. I would like to see what happens in the Asian session, first of all, okay? I don't want to make assumptions. I want to see what happens in the Asian session so I can get an idea of where the value lies and where the next rotation might be. But just kind of looking in advance, some type of rotation back into this zone here, and then continuation to do a proper gap fill down at the 29,800s seems to make sense to me. Not like I'm setting a limit, sell limits here, not like this is a definite model. This is just something I'd like to see, but nothing to execute. So that's NQ kind of summarized. The 2 sells we've taken today, low time frame context. So we had the low time frame mindset, yeah, intra-session context, intra-session mindset. Progressing forwards, we can go on to GBPUSD. So this is less of a trade signal, more of an analysis, but it does provide a couple actionable zones. We're just going to make sure that you understand that we have a good understanding of where is price, where are we at, okay? What's everything? So here we have our May lows, right? These lows here are the lows of May.
Yeah.
These highs here are the end of May highs, and they're kind of like the high of the existing range. On top of that, what we're going to see, these highs here that we've got mapped out from Friday 29th of May, and they were almost tested into on Friday the 5th of June. I'm going to call these relatively equal highs, okay, at 1.34850. Relatively equal highs up here. Okay. Below these equal highs, we have this massive gap that came from last Friday, alright? Not last Friday, 2 Fridays ago, sorry. From Friday the 5th of June. We have this massive imbalance, which we began to test into, and then trading below the current price, 133,650, we have this existing imbalance from last Thursday in the New York session. Okay, that's the context of all the levels that we have mapped out. For me, the levels to trade are as follows, okay? So we have this range here between 1.34850 and 1.33600 or 33650. This is the range that I am wanting to trade. What I will firstly note is we are obviously trading into this imbalance right now. If you were looking to execute sells, you need to execute these sells up here on Monday, okay? I'm not interested in taking sells much lower down, having to have my stop loss an extra 20 pips to compensate and to all this bullshit. So that's why I'm not providing like a signal or trade from here, even though I call it an actionable level. Furthermore, we filled this imbalance. We don't need to be doing business up in this imbalance again unless we're going to come up to take out these equal highs. All right. So that's why I'm not providing signals off this zone for now. And for that reason, I will remove it just to make things a little bit cleaner. All right. So if we extend this out just for spacing, what we're going to be able to see here is the range that I would like to place. So what you can obviously tell is that we're in this zone where there's liquidity resting above these highs from Monday Asia and from below these lows, the lows that come from Friday London and New York, and also come from Tuesday Asia. Okay, all of these lows here, there's liquidity beneath them. These highs here, there's liquidity above them. So this is kind of the intraday range within the greater range that we're seeing. If we come below these lows, we should see a small cascade of sorts that's going to bring us into this imbalance from which we can take longs. We see a reaction in this zone, we see a cumulative price action, we see all the things that we want to see, then we can look to execute longs, target be these highs here, which are the Monday Asias, and then we obviously got the 1.34850 that we previously mentioned as these end of May equal highs, right? Alternatively, okay, because we are not biased traders, we just flow with the market and take what's given. So alternatively, we say that price has no business retrading in this imbalance, which is true. So we could see price push up from here. It is starting to build just the basic base to push to the upside with, the basic structure to push to the upside with. So we could see this continuation to the upside if buyers can take full control. In which case we want to see a sweep of these highs. We see a sweep of them and we start coming to the downside, then we can look to execute sells of our own on the breaker structure of this zone here. Okay. So on GBPUSD, we are playing a much larger range. We're playing more of like this intra-session. We'd anticipate this to play out over multiple 5-6 sessions, 4, 5, 6 sessions. So in that we'll be therefore managing trades in a different context. We won't be jumping on small profits. We will obviously be using sensible risk tolerance, sensible risk adjustments, but we're not just going to be jumping on small profits like the same way we would on that intra-session context. Does that make sense? So again, it's not a signal of sorts, but we can use this as like our guidance for the next swing position on GBPUSD. What's also important to note is once we get up here, it's really important that we don't just take fucking sells for the sake of it. We don't take the sells up here without valid reasoning, without the swing failure patterns, without the flow showing us that buyers are getting trapped, with all of these without additional confidence. It's really important that we don't take these trades too early, because it is just as easy to push up another 25-30 pips to take out the next set of highs. Okay. So taking the sells is just going to be really important that you're validating yourself. Whereas when we come to take these buys, it should be a bit more obvious whether we're going to get a reaction from here or not. Okay. So for me, I would prefer that we come down into this zone here and that we can execute buys in London, New York tomorrow. That's what I would prefer, but again, we flow with what happens.
Okay.
Makes sense, yeah?
Yeah.
So, progressing on, we will go on to gold. Okay, so here's March lows on gold that I've just marked out. Okay,
Mm-hmm.
if I'm not mistaken, these March lows, yeah, these March lows represent. I'm gonna label this. Okay, I'm gonna call it initial IN or INT initial 2026 low. All right, is what we're gonna name it. What have we seen on this initial 2026 low?
Deviation.
Drive below, deviation, cumulative price action, the U shape that we're looking for, the curvature that we're looking for, the wicks to the downside. We've seen the price, like essentially a valid deviation of this zone, okay, and it has provided a valid reaction. You might look at this and say, oh, it's not pushed that far, but in the context, it has. Okay, it has. If I go from bottom to top, like you see, that it's pushed 8.7%, 8.6% total. Like it has had a big push. So on gold, for the most part, you do want to have that kind of bullish bias for the time being, from my perspective. Right, you want to have that bullish bias on the longer time. As long as we're doing business above this initial 2026 low, okay, we can come as far down as this zone that I've marked out. You still want to have that bullish bias on like the longer horizon. Not saying that you want to bid now, definitely not. That's not how we operate, but that's what we could be seeing. In terms of how I want to view gold is, and again, within this context on the H4, why are we going to use the H4? How are we going to use the 4 hour? We're going to use it. We understand that each of the ranges between level to level are very large ranges, and what we want to use this type of chart for, what I want to use it for at least, is to give me bias and direction for the week, for a month, for more of like I want to have this general understanding of what price is going to do. I'm not going to execute on this entirely, but if price comes into this zone where we have the confluence of this imbalance from Friday 5th of June, which is valid on the TPO as well, importantly, in confluence with our VWAP, which is part of this context and the start of this previous range. If we come into here, then I'm going to have that sell bias, and when I'm going into the 30-minute for my intra-session trade, for my intraday trades across multiple sessions, then I want to have that sell bias, and that's more so what we're using it for. So from this context, what I want you to think of is breaking these down into different ranges. Okay, so when the price is where it stands now, these two zones that we've marked out, we have the 44.04 and we have the 42.70. These two zones are our first range that we want to play. Okay, and what do we mean by that? Once we want to have a sell bias in this zone, we want to have a buy bias in this zone. Very fucking simple, right? Alternatively, okay, let's say price pushes to the upside and we move into the next area and we start holding this zone. Then we don't just like say, oh, we need to make a whole new chart now. No, we now play the next range. Okay, so the next range would be the same set of levels. 44.04 confluence of VWAP and the imbalance. Up into our next zone that we've marked out, which is this one here, the 4600s. 4600 is psychological level. 4600 is essentially all the liquidity above these 1, 2, 3 equal highs. Alright, so 4600 is the next zone to play. But let's say alternatively again, once we come down to the 4270s, actually we break down and we flip this zone, okay? Becomes an IFVG as the kids call it these days. Then we can be looking to play this range instead, right? The initial 2026 low to the 4270s. So the way that I'm using this chart is not saying, okay, we're in my zone, I'm buying, or I'm in my zone, I'm selling. I'm going to have a bias for that direction when we're in our zone, but I'm going to trade each of these zones between one another, and I believe price will. I'm marking out price in a way for it to kind of trade between these zones. It doesn't matter if it's going up or down or fucking sideways. We know the areas of interest and we trade between them. Okay. So this is where I anticipate gold to kind of trade over the next month. These are the ranges that I would play, and I would essentially alternate my bias week on week depending on how we interact with each of these levels. Does that make sense?
Mm.
My opinion, this chart on gold is really clean, and definitely one that you kind of want to copy, maybe even take to the study book, the study room. and go over it again. I'm going to get a little screenshot in. Try it again. But yeah, there are 3 different charts, 3 different contexts, 3 different time frames, kind of breaking down how I like to use each of them, how I view each of them, how my mindset switches between each one. Any of the charts you want me to go over again? And I'm assuming you're good with all the concepts. I've kept the concepts as entry level as possible, you know.
Yeah.
That sounds good.